Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Saturday to you and your family. We're taking a little look here at Terra Classic, kind of seeing what's going on, of course. Just trying to reiterate best practice and big picture. And if you're new to the channel, just know, not a financial advisor. Truly love teaching people to trade. Hope you can learn something here today, of course. If you want to become a better trader, again, CryptoCache.tech is the website. Link in the description below. I do offer a trading academy, community, and signal group. Really awesome experience. Thank you so much to my current community members. So taking a look here at Terra Classic, let's start with some of the obvious and kind of work our way down. We don't need to go into super detail here, but yesterday, big surprise, after 3 white soldiers comes a red day. Very, very standard. Now, if we look at history, first of all, for Luna Classic, and we kind of understand what it did previously, because it pretty much did the same exact thing yesterday, we can see here 3 white soldiers, of course, followed by a 4th red day. Big surprise, we see the exact same thing here the last few days, okay? So again, that being said, when we see that, that is effectively just telling us that it's probably going to follow a similar pattern. So if history does tend to repeat itself, which oftentimes it does in trading, we can see this happen. Now, why don't we go ahead and take a quick look at Fibonacci and kind of just stretch it out and see how these lines lined up. And we can see the price action inevitably arranged itself between 0.236 and 0.382. Okay. In other words, once it lost 0.50, basically the halfway point of its full extension from top to bottom, we can see that it averaged itself out just below that. So hypothetically, if we were to do a very similar structure here, we can kind of see that 0.5 is right here, and hypothetically, the price action could and should average itself out if it loses 0.5 right in this range here. Okay. Again, that's if it follows the same history. Is it going to do that? Not necessarily. We don't know that for sure. It has a lot more volume now than it did before. There's a lot of reasons why it may not do that. But if you're just going to do a carbon copy of before, it did average itself out just below the halfway point and inevitably lost that support. Okay, so hypothetically 0.5 is an area we want to kind of pay attention to. That being said though, again, that's not the end all be all here. There's a lot of other positive as well. Okay, so let's take a look at that. First of all, RSI is over 70. Typically, I don't like to say this is a positive, but when it comes down and effectively bounces and stays above that, it's working as a support level, which does reiterate here, right around 22,400 is a key level support, okay? It's a very good sign to see it kind of hanging out in that area. MACD is not something we're going to want to try to look at because honestly it's a bit flawed, but oftentimes the strategy for a MACD is is to effectively sell right at this level when the price action starts coming back down. In other words, hypothetically right now, we should sell because the likelihood of it coming back up is pretty high, right? So that's kind of where we're at there in that sense with the MACD. Again, no guarantees on that. You don't necessarily want to just take a trade based on that one sentiment, but in truth, that is telling us that we're extremely overextended and the likelihood of it continuing higher from here is lower. In other words, we should, at the very best, see the price action go sideways for a few more days. Right, that's what we should see and should expect. Again, just something to kind of think about. Take a look at the 4 hour. This is more of a transitionary time frame. I refer to it as a midterm. Basically, just this midterm time frame is giving us a few different things here. So first of all, we do see this kind of trend that's forming, right? We can kind of see this ascending type of trend that occurred here when it hit these 2 points. Okay, that is running concurrent with a 20-day set moving average. When you see that happen, it oftentimes works as a support level. Big surprise, the price action is working as a support. So we're above this trend, right? This is a positive thing. If we break into it and or lose it, that would be a different conversation, right? So tomorrow we might be able to see if it stays above or comes below. If it stays above, it wants to continue to ascend, and the likelihood of it continuing higher is greater. Obviously, the inverse applies too. If we lose that, then we can expect the price action to come lower, probably likely retest that 0.5 area, okay? So again, right there at 0.5 exactly is almost exactly 20,000. So 20,000 is, I would say, the area in which we want to pay attention to. If the price action inevitably averages itself out there, it's going to fulfill a similar destiny as it did before, right? And again, it's not always 100%, but trends have a tendency of repeating themselves, at least in cryptocurrency and traditional markets as well. It's just kind of a trading thing. Anyway, so that's kind of where we're at there. Both moving averages are below the price action. That's a positive. We're still in good shape. We can see the RSI finally calm down on the 4 hour, which is nice. We're trending closer to 70, but still not above, so we're not overextended by any stretch. So hypothetically, the price action could increase from here based on the simple sentiment that it's doing fairly well and not overextended. Okay. The one thing we got to recognize though is if we take a look here, we are now essentially making lower highs and we have yet to make lower lows. So if the next low is below the point of 22,400, then we know at that point that we're making lower lows and the likelihood of the price action continuing to the downside is higher. Okay. For right now, it's hard to say specifically. This key level resistance right here at 26,100 is essentially holding the price action in place. So it's not willing to go past that point. That kind of reiterates the fact that, again, we're making lower highs, and that's not a good sign. That's typically a transitionary thing you want to look at for a short position. In other words, the inverse applies too. When you start seeing higher lows, that's more of a long type of mindset, or more of a trend breaker the other direction. This could be an indication that the price action wants to come down lower because we have lower highs. Again, just something to pay attention to. Is it concrete? No. But at this point, we've got a strong enough divergence. I wouldn't be surprised if the price action does continue to taper off, right? So we'll see if this resistance level at 26,100, 26.1 is a rough estimate, is going to hold, okay? We're going to see that, of course, here in the near future. So let's take a quick look at Ichimoku Cloud, and we are within the cloud, so this does give us a good sign here. In other words, first of all, you see how this trend is running concurrent with the cloud? That's oftentimes the way that it works, because the cloud is very good about giving you an overall trend and helping you understand if you're within this trend, then you don't want to take a trade. The common practice is to omit taking a trade. The key is to indicate if it stays above or below. So right now it's tentatively above, and I say tentative because it's trying to break, but it's not clean. We see the conversion lines above the baseline, but the lagging span is in the price action. So in essence, the Ichimoku Cloud is giving us 2 out of 3 indications that a long position might be viable, but no confirmation whatsoever. So do not take from this conversation you should take a long position from here, because that is not what it's telling us. It's telling us it has conflicting information and that it isn't fully ready to choose a side, okay? It's still kind of figuring things out. I want to wait until the price action gets over here or down here or up here before I take a trade, okay? It needs at least 24 to 40 hours to recover and just kind of pick a side, if you will, okay? So again, those are things you want to try to pay attention to. If we see TD sequential, there's not much else to note here except for the fact that, again, I kind of reiterated that we had 2 9s in a row, and oftentimes that is a recipe for reversal. So it's common that the price action comes down as a result of seeing multiple 9s. And again, a 9 is basically just a sequence of numbers. When you see 9, green candles in the same direction, or just 9 ascending candles that are higher than the 4th previous, then at that point you can expect the price action to potentially reverse, especially if you see it 2 times in a row. Okay, so again, this correction makes perfect sense. It's exactly why 3 white soldiers is a common trading candlestick pattern. Okay, again, I hate to say I told you so, but obviously the price action is going to be consolidating. So try not to FOMO in, because there's no reason to do that right now. There's no indication that it's going to just take off. If it does, it'd probably be a fundamental catalyst, and those are things you have no control over. Okay, so again, just some stuff to think about. Hopefully this helped educate you and to kind of get you a little bit, back up to speed, so to speak, kind of help explain how I like to, set up my trades, for example, as far as, what I look for in patterns like this. This is a very common characteristic in trading. So it's behaving pretty much exactly the way that it should, based on its history and also different patterns that we're used to seeing. So all in all, I hope that you learned something here today. Obviously, if you want to become a better trader, CryptoCache.tech is the website, link in the description below. I do offer a trading academy, teach you everything that I know, as well as trading community and signal group. Keep in mind, coins like this, I try to stay away from. I prefer, trading more traditional coins, I guess you could say, that have a longevity. This being kind of newer, it's still establishing itself. I don't really love the volatility, even though its volatility is kind of what you get in crypto, right? Again, my trading style doesn't work well for this, but I can tell you that if you like this, there's a lot more where that came from. All right, so hope you have a good rest of your day. Thanks again for your time. We'll see you in the next one. You take care.